Welcome to The Digital Footprint, a podcast for leaders in healthcare, public health, and education who are looking to leverage technology to solve problems and make a big impact. In each episode, we interview innovators and entrepreneurs who are solving the most challenging problems facing these industries. Join us as we dig into the colossal tasks involved in bringing a new digital product to life. Welcome to The Digital Footprint.
Okay, hello and welcome to The Digital Footprint. I'm Richard Sims. This podcast is brought to you by Tyrannosaurus Tech, an award-winning technology partner dedicated to designing and developing high-impact software products. Today, I'm joined by Seth Radman, co-founder and CTO of Infinite Giving. Welcome, Seth.
Thanks. Glad to be here, Richard.
Yeah, I've been really looking forward to this conversation. So you and I met probably 3 or 4 years ago at this point. And my first memory of you was you pitching and demoing Crescendo at one of our product hunt meetups when we used to run those back in the day. And I remember being really impressed with the concept and the product. And I play music, so I really immediately resonated with me. But I remember when you demoed it, I just assumed it was kind of a mocked up demo or essentially like an animated clickable prototype. I did not think that the functionality was real.
Sure.
Very impressive. To your credit, it was. And of course, I know you all had a lot of success with that product, and it was acquired by Ultimate Guitar, which is just super cool. And I know you found that success early in your career. So you've been through a lot of exciting adventures in the startup world already. So that's one reason I'm very excited to have you on the show, of course. So today, I mostly want to focus on your latest and greatest venture, which is Infinite Giving. So just to jump right in, can you take a minute or two, introduce yourself, and just tell us a little bit about Infinite Giving? That would be great.
Yeah, absolutely. Thanks for having me here. Really great to connect with you again. So I went to Georgia Tech, studied mechanical engineering, briefly worked at an aircraft company for a bit, which was a lot of fun and fascinating, but wasn't really the kind of impact that I wanted to make on humans and building products that they would get to use. So on the side, I learned how to code, and I started building iPhone apps. And I built more and more iPhone apps, and most of them failed. But after a period of about probably 3 or 4 years, I had built 40 iPhone apps. And a lot of these were for customers, for consulting, but a few of them were just ideas that I had. And one of them ended up being Crescendo. That once I built Crescendo and some people started liking it, I thought, I'm getting pretty good at this. Maybe I should focus on Crescendo. So I focused on Crescendo. Just like you mentioned, we were an interactive music training app, kind of like Guitar Hero, but for real instruments. And we grew it to over 1 million users, got to do some fun things. Like we got to meet the actual creators of Guitar Hero, got to pitch at South by Southwest. Really fun adventure. And then we were acquired by Ultimate Guitar, where I got to see what it was like working at a company with 300 million monthly active users, leading their product strategy and design. So did that, and then as we all know, COVID hit and the world completely changed. And so I saw an opportunity to create another product to help teachers, and created Upbeat Music app, which is essentially like Zoom, but for musicians. So it'd help you be able to rehearse and play in real time without the latency that you have on Zoom. Another thing that happened though during COVID, in another world that I was unfamiliar with until I started catching up with some other friends of mine, was stuff in the world of nonprofits, where during the year of COVID, a lot of nonprofits either went out of business because they didn't have the funds to be able to sustain themselves, or they got more funding than they've ever gotten before from a lot of donors and programs that were going on. At the same time, we have this crazy market with crypto, with just the general stock market, that I think probably more people became aware of the power of investing over the past 24 months than perhaps the past decade.
Yeah.
So as a result, we've got into the situation where as individuals, there's a lot of great tools to help us with personal investments, right? There's wealth advisors at banks. There's tools that we can use like Wealthfront and Betterment that are robo-advisors that automate stuff for us. And it's fairly simple to do this through our traditional financial institutions. The reason we started Infinite Giving is to help nonprofits be able to have the same access of tools to be able to help them grow their giving using modern financial technology. And so the average nonprofit could easily have a couple $1,000,000 saved up in their bank account. And a lot of the time it's just sitting in their savings account, which we know do not earn a good interest rate. And so what Infinite Giving does is it's a automated robo-advisor investment tool that nonprofits can use to grow their giving and invest their funds in low risk, low cost ETFs over time so that they can earn closer to a market return over time instead of just seeing the power of their dollar decrease due to inflation. Yeah, that's probably a high level of the path that I've been on, and mostly focused a lot in the music and technology space, and then reconnected with Karen Houghton, who's our CEO at Infinite Giving, and just fell in love with the mission and felt like the timing was absolutely perfect and decided to make the jump into the fintech space, and here I am.
Very cool. Yeah, that all makes a lot of sense, and I have to think that with COVID, to your point, stars aligned a little bit there. Maybe again, one of the unexpected positives of the whole pandemic, some of the work that you're doing with Infinite Giving, and then of course now, and I think you all allude to this on your website as you should, with inflation really going up, it is that much more problematic to kind of leave that money sitting idle. So hopefully that's all helping you all build a lot of momentum. You touched on one of the things that I was going to ask about, because I know you're working with Karen, which is great. She has an amazing reputation, and you're kind of more in like the Atlanta ventures scene, which is obviously a really vibrant place. What's that been like? I mean, my impression from a distance is that startups you've done in the past have been kind of more with one of your buddies from Georgia Tech or something. Like now you're kind of have some really serious advisors in the mix and stuff, which is really great. I'm just curious what it's been like kind of coming into that different ecosystem.
Yeah, it's a great question. It's been so much fun working with Karen. She's a blast to work with, and she has a really cool background that she was a director for a nonprofit for a while, so she understands our space really well. And she grew Atlanta Tech Village from the ground up. So she's been around all these tech companies and knows the power of technology to automate stuff. And then on top of that, since she's been around all these successful startups, her network is incredible and has helped open so many doors for us. But you're right that the previous companies I've done have been mostly bootstrapped, right? Maybe we took a round or two of funding, but definitely didn't go the seed, Series A, Series B, Series C route. And that is the route that we're headed on right now with Infinite Giving. And just with fintech in general, typically requires a little more capital up front because there's a lot more expenses and costs involved with compliance and legal stuff and banks and payments. These things are expensive. So the venture route is very different. There's obviously some positives, some negatives, right? You lose a little bit of control, but you gain a stronger network and funds to be able to move more quickly. So far, it's been really amazing and fantastic being able to be close with people like David Leiper and David Cuppings, who have collectively launched companies worth billions of dollars, and being able to hop on calls with them very quickly. It's definitely helped me personally grow, just to understand what it takes strategically to build a large, successful fintech company.
For sure. I'm sure that's an awesome learning experience. And then, that group understands kind of how to apply that gas when you're going into growth mode. So that is all stuff that I don't pretend for a second to be an expert on. So I'm sure it's great to kind of be thrown into.
I'm not an expert yet either. I'm still learning.
Yeah, I love it. All right, cool. So let's get in the weeds a little bit more about how Infinite Giving operates. So, I've been exploring the site. I think it's a great concept. It's easy to understand. How's it work currently as far as, let's say, a new profit wants to get onboarded? How's it work now? Where do you all aspire for that to be in the future as you expand the product? Just curious what it's like kind of behind the scenes and behind the login a little bit.
Yeah, great question. So right now, if you're a nonprofit and you want to invest your funds, you typically have to go to a big bank. You're going to fill out PDF forms, send sensitive information back and forth over email. It'll take maybe 4 to 6 weeks. And then after that happens, a lot of the time, you can't even see a dashboard or web portal. You have to physically call someone every time you want to get an update on your balance or see where things are or make a transfer. And so especially for younger people who are starting to move into leadership roles in nonprofits, we want to be able to see, and everyone of all ages, I think a lot of them want to be able to go on the internet, log in, just like your personal account, and see where your funds are and see performance and see your money. And so what we've done is we simplified all of that to a 10-minute new account process that happens completely online, where you submit all the information and we do all this magical automation in the background to open your account. And I think the biggest challenge of that is making it seem very simple and seamless to a user. But in the back end, we have a wild spin of all things. That we have an anti-money laundering policy to make sure that you're not trying to launder money through a nonprofit that is tax exempt. We have to verify that you're tax exempt. We have to go through compliance records to conform to identity theft and protection programs. We have strict requirements with FINRA and the SEC based on the type of investment grade bonds and assets and securities we're allowed to offer to our customers. So I think customers probably see maybe 5 to 10% of all of the work we do in their dashboard and the 15 to 20 screens that they see. But simply put, once they're inside the product, they go through a brief questionnaire where we try to understand more about the customer's goals. We ask questions about their time horizon. Is it something short-term, medium-term, long-term? Their liquidity needs. If they need to take money out, how long can they wait to avoid having a loss if the market's gone down a little bit? And then we also see what existing infrastructure they have in place. That a lot of boards for nonprofits already have an investment policy statement that says explicitly how they're supposed to invest funds. Mm-hmm. But at the end of the day, they go through, we understand some information about them, and then our algorithm analyzes this information and makes a recommendation that we have 5 portfolios total, and we have another 5 coming that are in the ESG side, or environmental, social, and governance, for people who want to invest more responsibly or ethically. And simply put, our algorithm recommends a portfolio that they select, they click it, and it's really that simple. They transfer in their first initial deposit, and then they're done. We automate their investment. We keep them up to date with new prospectus and information on their account. And it's really, really dramatically simple compared to how it is with big banks right now.
Okay, awesome. Yeah, that makes a lot of sense. So it kind of answered one of the questions I had, which it sounds like you all mostly aspire to be very self-service. And then my question there is just, how do you view the balance of, the product with kind of what's traditionally the more human side of, financial advisement, or whatever the appropriate money management term would be?
Yeah, it's a great question. A lot of people, I think, are comfortable with a human, right? We're used to that. That's the traditional approach. There's research that shows, it's called modern portfolio theory, that shows that 90% of wealth advisors actually cannot outperform the market over about a 5-year period of time. And more people are becoming aware of that having passive investment engines, while emotionally may not feel as comfortable, statistically are more likely to result in better returns than a wealth advisor. And so a lot of the time we think, nonprofits that have, let's say, less than $20 million in assets, are they really getting the top 10% best wealth advisors in the entire country? Or are those people hanging out on the Harvard Endowment Board, right, helping them manage those funds? Mm-hmm. And some people are getting lucky. But at the end of the day, we're following algorithms and mathematical theories that have been in place for decades, right? Even though we're a new company, the algorithms that we're following are not new, and those have been for a while. We've just modernized and automated them. But on the other side, we do have humans too, right? We're a registered investment advisor with the SEC. We have investment advisor representatives on our team. And if our customers want some extra human attention and some physical help to make a decision, all they have to do is book a call with us, and we're happy to hop on a call with them. So everything is automated, but we do have people too, because not every decision can be made by a computer.
Yeah, that's great. And I think you're dead on that a lot of folks are increasingly aware of more passive investment strategies that are tried and true, that you can feel very comfortable in. And I think, to your point, as more younger people are moving into leadership in nonprofits, they're going to be much more comfortable with that kind of workflow. So that makes a lot of sense. One question I had, so we all know, I think, that unfortunately nonprofits are often not leveraging technology to the extent they could be. This is obviously part of what you all are trying to address, but that reality presents challenges too. What's it been like, trying to get nonprofits to buy into utilizing a platform like this? And, how has it just been in the nonprofit space as compared to most of your previous experience where you were working with, let's say, young musicians that were very eager to experiment with new technology? It's a much different landscape. So I'm curious what that's been like for you so far.
Yeah, that's a great question. The sales process is definitely very different, right? It's more B2B instead of previously I'd done more B2C stuff. And they're nonprofits, which kind of behave like larger corporations sometimes. They have a board, executive directors. So overall, interacting with these nonprofits is extremely pleasant. I mean, the people who work there are there not for giant paychecks, right? But because of the impact that they want to make, and the work that they do is so fulfilling to them and has just an incredible impact on the people around them based on the mission that they're trying to fulfill. I think overall, people are generally very excited and receptive about what we're doing, right? They realize, oh, you're right. My money's just sitting in a savings account. And just last year, you would have lost roughly, inflation is typically around 2 to 4%. Last year, it was bordering on 4 to 6%, right? Mm-hmm. So just right there, if you had $100,000, the same amount of money is there, but you lost $4,000 to $6,000 of spending power that over time you're just going to keep losing more. And we've all seen the charts of what $100 could get you 40 years ago compared to what it can get you now. So overall, I think most people we talk to are very excited. Most people seem to get it right away. The biggest challenge is really just the board, right? That you have to be very patient, that sometimes these nonprofits have quarterly board meetings. And so we may talk to someone on January 10th and they may say, this is awesome. I know people are going to love this. My next board meeting isn't for 2.5 months, right? And so from a business perspective, it definitely impacts our sales velocity. And the way we solve that is just by getting more nonprofits at the top of the funnel, which we've padded with now. That we started with probably 10 or 15 nonprofits in our pipeline at the beginning of the year, and now we're up to past 100. And
awesome.
Sure, obviously we're not going to have a 100% close rate, but the thinking is in 3 to 6 months, they'll be having their board meetings, a lot of these people on board. So overall, I've definitely I've lived by a mindset that I'm very impatient on a daily basis. I want to work very hard on the current day I have to get as much done as I can. But longer term, I've developed a greater sense of patience, knowing that once we do get these customers, they'll ideally stick with us for quite a long time because people don't change banks very often.
Yeah. That's great, and that makes a lot of sense. And we do a good bit of work with nonprofits, and I love it. And I empathize similarly because there's just a different mechanics of getting decisions made and how funds are set aside or what they're categorized for. And we're often trying to navigate that ourselves. So I'm right there with you. But it's also very relationship oriented. So put in those steps and build trust and rapport. And like you said, it'll come around. A lot of what you're describing at a high level, it's not rocket science. I think most of us are exposed to basic investment strategies, what type of index funds are available, obviously inflation, just some of these concepts. And you're a sharp guy, so I'm sure you know a heck of a lot more than that, but you're not coming from a finance background, obviously. No. Have you just kind of learned this stuff on the fly? To what extent are you relying on some of the other folks on the team that have deep expertise there? Just curious what it's been like navigating into that finance world.
Yeah, it's a great question. So I think I've gone from at first I was super intimidated and overwhelmed, because you're right, I don't come from a finance background, and here I am trying to be the CTO of a fintech company that not only is trying to move fast, but is VC backed and has pretty aggressive goals to be able to hit our next round of funding and serve our customers well. So I think the best thing that's happened for me is some of the advisors we have in our team. That I think there's probably 2 or 3 advisors who have personally managed billions and billions of assets just themselves. And those people have helped distill the market and how money works into a few simple concepts that guide most of what we do. Because you're right, at the end of the day, what we're doing is not complicated. We're not day trading. We're not trying to do advanced technical analysis on cryptocurrencies to figure out when to buy and sell. Instead, we're making very intentional decisions based on longer term periods of time for customers. And so typically, obviously this is not financial advice, but generally a phrase we commonly like to say is time in the market usually beats timing in the market. Right?
Yeah.
And that this is a longer term investment that people are making. So overall, I've listened to a lot of advisors, read lots of books, taken some online courses, and obviously learned a lot from Karen, who is is certified with her Series 65 for us to be able to operate this business. But I'd say the biggest thing has been having some advisors who are wealth advisors and financial advisors and wealth managers who have been doing this for 15 or 20 years, and the game is the same. We're just using technology to automate what people have been doing manually for a long time.
Yeah, awesome. Okay, that's great. So I want to come back to infinite giving, obviously, but I want to pivot a bit to a different topic that I think is especially important and could be very beneficial for our listeners. So founder mental health, how important it is to balance the startup founder lifestyle and the myths that exist there with a truly sustainable lifestyle, right? I see you post a lot about this on LinkedIn, and I really appreciate it. You hopefully notice I give you a lot of likes, but so do a lot of people, so I'm sure I'm lost in the mix. But I really appreciate it. I mean, you've obviously been a founder multiple times. Seems like you've kind of experienced the full gamut of emotions and lifestyles on that. And again, I empathize because I am constantly torn about how much time I should be putting in, how much I should be burning the candle at both ends. Like, is that the only way to succeed? Feeling guilty when you're not working at that capacity. So it's really refreshing for me to see someone kind of call BS on a lot of that hype sometimes. So yeah, I mean, I know you started your first business really young. My impression is you came out of the gate just 110% all the time and then wised up a little bit. But yeah, tell me a little bit more about how your perspective on all of that has evolved over the years.
Yeah, your assessment is pretty spot on. So I started my first company when I was 20 years old in college. And at that time, the only guiding post I had about how to run a startup is what I read online. I didn't really know any friends who were doing startups. All I could see was blog posts from Michael at Y Combinator. I had TechCrunch articles, and you can see Techstars companies that are going on to do great things. And from everything I had heard and read, if you wanted to have a successful startup, you get to have two hobbies. One is your startup, and one is something else. That something else could be sleep, it could be eating healthy, it could be exercise, it could be hanging out with friends. And so in retrospect, I realize now that's a really awful mindset, and that's just going to make things really tough in life. And there's still a debate, right? There's some people who think that you have to be working 80 hours a week to be successful, like Elon Musk, and only sleep 4 hours a day. There's other people who think that that's just not sustainable and that life is meant to be a little more balanced for you to be able to enjoy what you're doing. And so throughout college, I worked most of the mindset of like, I'm just going to power through and work super hard and put in tons of time. And I did make a lot of good progress with my business, but there were pretty significant costs, right? Like a lot of friendships and relationships I had were difficult to maintain or just kind of fell off. I didn't really keep up any hobbies that I had. Like I really loved playing saxophone, and for probably about 4 years while in college, I touched my saxophone maybe once. I was in marching band, which was fun, but it wasn't the same as, practicing on my own to improve. Mm-hmm. Really didn't do any hobbies like ultimate frisbee or rock climbing, which are two things that I really enjoy. So I really only focused on grades and my startup. My sleep lacked. I wasn't eating healthy, wasn't exercising well. And so like most people, I feel like a lot of people dive in like this and they hit a breaking point. That I hit a breaking point where usually came around final exams, right? That it's already a very stressful time, especially at a college like Georgia Tech, which is very fast paced and can be overwhelming at times. I'll never forget, I think it was either sophomore or junior year, final exam season came, and I was trying to hit some deliverables for a new app we were building for a client. And we've probably experienced this at some point where you're just up and it's 1 a.m. and you just realize that you're just not going to be able to do it, whatever you're trying to accomplish, that maybe you're in over your head and it's just too much. And pretty much just had like a massive panic attack and was like, all right, I can't do this. I'm done with startups. This is too much. Maybe I'll try it again later. And that lasted about a week. But for a week, I was like, I'm not doing startups ever again. Too much. It's just not worth it. And luckily, someone convinced me to go see a therapist and talk with someone to get some help, because a lot of people at Georgia Tech are feeling stressed for different reasons. And especially with COVID right now, I imagine more people are experiencing depression and anxiety than ever before. So to kind of summarize the next several years, I realized that I was kind of defining my definition of success based on what I saw other people doing. And I thought that meant for me to be successful, I had to put in 80 hours a week. And after 6 or 7 years, my startup had to have 2,000 employees and then get acquired for $1 billion. That's what I thought it meant to be successful. And it turns out that a lot of the people who accomplish that often are the most depressed people, right? Like I know a lot of founders, and I'm not saying this is always true, but a lot of the time, the bigger the company they have, not always, but I've seen a decent correlation with the more depression and anxiety that they experience personally. Not that you can necessarily draw any conclusions from that, but it's a fact worth stating, or rather an observation worth stating. So anyways, my opinion has shifted over time, that I went through that phase, and then of course I did get back up, and then I built Crescendo. And then after Crescendo was acquired, I had another problem where I felt like my baby was taken away from me, and I was really depressed for probably 6 or 9 months after Crescendo was acquired, because I didn't expect us to get acquired, and that was kind of the big goal. So I thought, what do I do next? I felt pretty lost. Do I go work for another company? Do I go build another startup? I had accomplished one of the goals in life that I expected to take 20 or 30 years really quickly. And obviously we had an early exit, right? We were only around for probably 3 or 4 or 5 years before we were acquired, but it still put me in a position of uncertainty about what to do. So through that, over time, I kind of adopted a new mindset that obviously there's definitely sacrifices you're going to make to build your startup, but I've started to reevaluate my priorities in life. Like, for example, I don't have to be working 80 hours a week to be effective. Instead, I can focus more on what activities are going to make the biggest impact for my business. Because when I look back at the days in college, sure, I spent 80 hours per week on my startup, but probably 20 or 30 of those hours actually move the needle forward, right? I've gotten better at focusing about what activities are necessary, like improving my business cards, spending 3 hours on that. Probably not going to move my business forward as much as hopping on the phone and talking with the customer, right? Yeah. But it's one of those first initial easy steps that is exciting when you're starting a new business. So overall, my perspective now is that I really put my mental health before everything else, even if that means that my startup could be in jeopardy of going downhill. I know that if I'm not at a good place mentally, physically, emotionally, I certainly can't be there for the rest of my team, my employees, and I definitely can't be there to serve my customers. So I've definitely dialed back where I'm working closer to 40 to 60 hour weeks now. Mm-hmm. And I also don't have kids, right? And so if I had a family and kids, I'd probably dial that back down even more. My priorities would change. But I've definitely got more balance in life now, where I'm now a very strong believer of the mindset of find a balanced way to do something sustainable so that you can enjoy it while you're doing it. And sure, there's going to be lows, there's going to be highs, but that's why you have sleep and eating healthy and exercise and other hobbies and friends to be able to help you get through the tough times.
Yeah, for sure. I think it's all great points, and I think it's good that you've kind of been through both ends of it and have a good sense of what the balance is. I mean, I've certainly had to go through that too. And even in my entrepreneurial career, I haven't been doing, uber growth focused product startups, which I think is even a whole other animal as far as what comes along with that, the kind of pressure, the success stories that you see. And still, for me, yes, like I've really had to get out of that mindset that if I'm not working all the time, I'm doing something wrong. I've certainly hit breaking points at times that have, forced me to do a reset. And then, I think as you get older and you do have, a family and kids, which I have, it's not an option anymore, which is largely good. It's good. Yeah. And it just forces you to kind of get into something that is a little bit more of a balance. So, I definitely commend you for putting that stuff out there, because I think that people need to see that. There are those that just love that grind, and that's not wrong, but I think for most of us, definitely including me, that is not sustainable. It's not healthy, and it doesn't lead to good work. And to your point, the last thing is, as you said, in those amazing scenarios where someone finds great success and sells their business, that is a happy ending, but life goes on, and we have human nature. So you don't just live happily ever after. There's anxiety and turmoil about what's next and finding purpose. So, we're never going to change the growth mentality of the startup world. That's a good thing. That's what it's about. But I think there is something to be said for succeeding in 3 years versus 5 years versus 7 years. Just enjoy the journey. And more often it's, a much longer timeline for a real success story. So anyways, I'm curious, how do you try to structure your work days and then your nights and weekends at this point so that it doesn't get too out of those boundaries that you're trying to place, Yeah,
that's a great question. I definitely have gotten better about imposing a structure, because as a startup founder, one of the greatest things, but also scariest things, is that when I look forward to my next week, a lot of the time my week starts where my calendar is completely empty. Right? I'm not at a corporate job where maybe I have scheduled meetings that I have to go to every week, or if I do, they're meetings that I have requested for my team. So there's a lot of blank space. I do have a few things that I've learned. For example, one of them is I actually fill every single time in my calendar for the next day. That doesn't mean I have to be doing productive work. Sometimes I'll block out 2 hours that says do nothing, right? But I've tried to be more intentional with how I spend my time. But anyways, you asked about kind of structure. So luckily, working for my own startup is pretty flexible schedule. So I think the summary of my day is I spend a lot of the mornings kind of heads down in deep work, where notifications are off, do not disturb is on, and you can't get in touch with me unless you're a family friend or my co-founder and you call me. And then of course I'll answer. But I found that if I can get 2 or 3 hours of deep work with no interruptions, that's for me the equivalent of maybe an 8-hour day with interruptions. And so usually I focus my mornings on deep work, getting output, and then my afternoons are more on collaboration. So it'll be meetings with my teammates, with others, partners that we have, with customers, maybe with investors. And then Evenings I like to generally keep open. I would say that my social life was thriving before COVID, but obviously during COVID it's been impacted a bit. But I've gotten better about, more of an introverted person, but I've gotten better about being intentional to ask friends to meet up for dinner or to play ultimate frisbee or go rock climbing and do some of the things that I'm passionate about, or just hang out with my wife and chill and watch TV, which I used to think was like the worst thing to do, just sit on your butt and watch TV. But now I think that it's a decent way to recharge at the end of the day to be able to keep things sustainable. So, and then one other big change that I made, and I'm really grateful that we have Karen, she's a fantastic leader. We have great work-life balance and culture at Infinite Giving, where I don't think we've ever had, maybe except for one time right before our initial product launch, I don't think we've ever had scheduled meetings on weekends, right? That there's a lot of other startups that I've run personally and that I've been at where you're expected to be working at least 4 to 6 hours on Saturday and Sunday to keep things up. And it's really nice being able to have that time off to spend with family, friends, with my cat, to go outside, to explore, to hike, to do whatever. Sometimes I will do some work on weekends if I feel like it. But that used to be something where for me the weekends were like, cool, heads down, I'm cranking out code and building product. And now that's my recharging time to make sure that I'm caught up in everything from the previous week and I have good intentions and goals and structure set for the next week. So it's been an iterative process to work on kind of what balance and structure makes sense for me. But I feel like I finally gotten to a good place now. And as COVID hopefully gets better, I imagine that will only get better for everyone too.
Yeah, that's great. And I know for me, it's been a evolution too. And then some of it too is just kind of, for me, filtering out a lot of like the startup news and stuff, even though I want to be tuned in. So I try to be, but I think it glamorizes a lot of exceptional cases that are not very real world or puts too much emphasis on fundraising and stuff. It's tough to reconcile that. Like sometimes it gets in my head that I'm, oh my gosh, I should be doing something much bigger, and it's all relative. So
that gets to me too. It's what I call success theater.
Right. I
like to frame that where you're right. I think if TechCrunch is covering an article that your startup raised $2 million in seed funding, they should be covering an article that you reduced churn or that you improved retention by 90% over the past month, or that you decreased your CAC by 12%. That should be a headline in the business. But you're right. It's a heuristic that we know things are clearly newsworthy when they're a raise or an acquisition or a strategic hire. But I think that Richard waking up to a bootstrap company that is profitable, having a team around him that enjoy what they're doing every day and happy customers, that's probably one of the best headlines you can have that unfortunately is not glamorized, but is likely one of the happiest ways you can live life.
Yeah, well, I appreciate that. And comes with its own stressors, but 100%, like, exactly. For us, it's a pretty good lifestyle.
Yeah.
Very, very low pressure compared to a lot of the other startup world. So, okay, cool. So we started this podcast primarily so it could be a resource for folks who are in the process of or considering launching a new software product. You've obviously started several businesses. You know how hard it can be to get something off the ground. Going back to Infinite Giving, what are some of the biggest challenges you all have faced so far, and how have you overcome them, or how are you working to overcome them?
Yeah, it's a great question. We've experienced a lot of challenges like anyone would building a new company, a new business. I think I can probably divide the challenges that we've experienced into two categories. One are like very specifically fintech related, that if you're not building a fintech company, they're not relevant to you. The others are probably more generic that are relevant to most people. I'll briefly mention the fintech ones, but then I'll spend more time on the ones that are probably applicable to most people. So I think the fintech ones are really very heavy tech integrations with payment providers and custodians, having a very thorough compliance review process, having to satisfy requirements by SEC and FINRA, and just having to have all the legal boxes checked off with everything. That it used to be in the BDC world, build an iPhone app, I'd think about the idea one day, I'd build it the next day, and then on the third day, someone would pay for it. And now it's more like, I'll design it in a day, we'll build it in a week, and then it'll take 3 months for our attorneys and legal team to figure out how we can do it. Like right now, we're trying to figure out how we can launch crypto donations for nonprofits, and that's just a huge space of lots of unknowns and regulations. So anyways, but aside from that, the business challenges, I think one of them is just customer development, that if you are building a new product, and like let's say you're building a mobile app, I think a lot of people focus way too much on the technology and the product at first. And what I think you should be focusing on is talking to customers, right? That technology is typically a fairly solvable problem. If you have a skilled development team and you have clear requirements and a good designer, it's not an unknown. You can build that product, assuming that technology is there, and it can be a great product. But that doesn't mean that customers will like your product or that it will help solve a problem for them. And so even after I've been doing all these startups, the first step is always talking to customers. And so what Karen and I did, or Karen started and brought me in halfway through, is I think we talked to over 100 nonprofits before we wrote a single line of code to make sure that we were building the right product. Because one of the worst things you can do, which I've done many, many times, is build a product that no one wants to use. And that's called an expensive hobby. And it's totally fine to have that hobby, but that's not a business, unfortunately. But I think some of the challenges initially were trying to interpret what our customers said versus what they actually mean, because a lot of people accidentally lie when they're talking about products. Like they might say, oh, I would definitely use this, to be polite, but then when you go ahead and release the product, they're not there because they didn't actually want it. And so you really have to understand not what people say, but what they mean when they say it and how they respond emotionally to things. Right now, one of the biggest things that we experienced growing was hiring. I know obviously the state of the world right now, hiring is very, very difficult. We were lucky to get a great engineer on board, Connor Ford, who had previously done a couple startups himself and is just a fantastic software engineer, and Arvin Potter, who is our intern from Georgia Tech, who's just a stellar front-end developer. So I think trying to move on an aggressive timeline was that. And then another big challenge we faced is, like a lot of people, we had a billion things we wanted to do in our product, right? And we wanted to get all those things out in version 1, but you just can't do everything in the first version. Or I should say you can do everything in the first version, but it'll take you years before you launch. And that's a pretty risky move to make. So the other challenge was figuring out of all the things we wanted to do, what are the 1 or 2 features or 3 features that we're going to include in the MVP, in the first version of our product, that are absolutely critical to providing value to our customers. It was a difficult process to figure out what we're going to shave off of our product and what we're going to keep in there. And it felt very bare bones at first, but it was the right product that we needed to start getting feedback from people. But overall, I've definitely grown a lot. If I think back to the first app that I ever made, I designed it all in Microsoft PowerPoint. I talked to 0 customers. I spent over 9 months building it. And then I think it had a total of 20 downloads after it was finally approved, after being rejected probably 7 times from the App Store. So yeah. I've definitely learned a thing or two. But if I could give one piece of advice to people building a product, it would be talk to customers more and make sure to hire great people who you want to be working with for a long period of time.
Awesome. Yeah, that's great advice. And everything that you're saying rings true to me, of course, and it's often, advice that we give to folks that are coming to us thinking about building out some type of MVP. And I appreciate that you have that perspective. I think some of that, of course, you've just learned along the way, but you also just have like a broader kind of maturity and business perspective, because a lot of engineers, as you know, love them. They just want to build, and that's great. But to your point, you don't want to over-engineer right out of the gate, and you certainly don't want to build something that folks aren't going to want to use or aren't going to want to pay for, or whatever it is that you need to build a sustainable business. So there's a lot of showing restraint there that is really in your own best interest. So what about some of the biggest wins so far with Infinite Giving? I know you all are still relatively early in the journey, but is there anything that stands out in your mind?
Yeah, definitely. I mean, just launching our product on time was a massive win. That I think Karen first shared the idea with me, I think in April of 2021. And then around May or so is when we hired our first engineer, and then we started coding in June, right? So here we are, a team of non-fintech experts, and we started building our product in June, and we released it on October 1st, which is just unheard of in the fintech world. In that period of time, we built a whole integration with our custodian, which they expected to take 6 months with 3 senior level engineers, and we had 2 senior engineers. We got certified as a registered investment advisor, and Karen passed her Series 65, which again, that's a pretty thorough examination that is supposed to take months and months of studying time. And we got all of our boxes checked off from compliance to be able to satisfy all the SEC needs and FINRA needs so that we could be a legitimate company. So that was probably a big win, just launching, because I mean, so many fintech companies, they fail to even get their product out because it's just very complicated in the space. And then anytime I hear from a customer and they say that it's improved their life, that's what the game's about for me. That Some people, they want to change the whole world. They want to do big things. For me, I'd like to improve 10 or 15 minutes a day in someone's life and help make their day just a little bit easier, because there could be a lot of stuff that's stressful in their life, but at least I know that while they're using a product that I've built, I have a decent amount of control to make sure that they have a good experience by being very intentional and thoughtful about how I designed it. And so, I mean, obviously we've had big wins like our first customer, right? Because until you build it, you don't actually know for sure if anyone's going to use your product. For all you know, you just wasted 3 to 6 months building something. But our first customer is exciting. And then probably the most exciting thing so far has been when we've had customers email us saying, hey, someone just sent us a stock donation. We had no idea how they were going to do it, but then they used Infinite Giving. They thought it was going to take them 2 or 3 hours. It only took 5 minutes, and they loved it. And we got an extra $50,000 donation from them that they can write off on their tax return that wasn't going to happen otherwise. That's money that could easily cover a person's salary. They could hire a whole other employee for a year at the nonprofit, or they could deploy those funds to amplify the impact they're making. So there's definitely been a few big milestones that we've had so far, but we really have this day zero mentality that we're very early stage. We're brand new. We've had some cool successes along the way, but we're just getting started and we have a lot of work to do still.
That's awesome. Yeah, I mean, I'm sure hearing that kind of feedback is super encouraging. And then, you know, what I think is great about the concept, and you're being very modest, but of course, hopefully you're giving folks a good experience just using the product, but you're enabling them to, as you said, amplify their impact. So I think that you and the rest of the team, I am sure, are already getting and will continue to get a lot of warm feelings about, really empowering these nonprofits. And it is really a win-win-win situation, in my opinion, because really no one's benefiting from that capital sitting idle and not being put to use to help more people. So I love it. I think that's great. So other question I had there, and kind of the last question, I think, and then we'll start to wind down. But what does success look like for Infinite Giving in your mind 1 year from now, 5 years from now? Like, how do you think kind of the bigger vision evolves as you grow the product and get more adoption? There you go.
Yeah, it's a great question. So I think our goal is really to build this financial operating system for nonprofits. That there's a lot of tools that exist right now to accept cash donations. That's a fairly solved problem. There's really beautiful landing page builders, and it's easy to accept donations. We're seeing more and more people, individuals, start to invest in alternative assets. That could be cryptocurrencies, it could be wine, right? It could be stock. And I always found it a little ironic that most of the world's wealth is held in these alternative assets like stock, yet nonprofits are still only asking primarily for cash donations, right? And so what we're working on now is to make it easier for people to donate endowments, for making it easier for people to donate crypto, stocks, all the alternative assets. We actually had our first nonprofit contact us a couple days ago saying, hey, I have a donor who wants to donate an NFT to me. How do I do that, right? They have no idea what a wallet is and how to get started, set a Coinbase account. That's just too much for them, right? So the goal is for us to be this kind of alternative asset management software for nonprofits, for them to be able to manage all their donations that aren't cash, and eventually cash too. And then beyond that, I think we can expand to a lot of other problems in the finance space that nonprofits experience. Like nonprofits, it's very difficult to open credit cards not in your name if you're a nonprofit, not in your personal name. Managing 401ks and 403bs for nonprofits is also a pain. And so I think once we've kind of gotten an initial customer base hooked on our product and really enjoying it, I think there's ways we can kind of land on that customer and then expand to offer additional services to them. So right now we're laser focused exclusively on 501c3s, on nonprofit organizations, and that's a pretty broad reach. There's 1.4 million nonprofits in the US, right? So currently we have 6 customers. Our 7th is coming on in a couple days or maybe a couple weeks. So beyond that, we're really going to be amping up our sales team. We just brought on RJ, who's our director of business development, to really help us get some more inbound and increase our customer base, because we've gotten the signal from people that they want this and they like it. It's very helpful. And now we just got to figure out how to reach more of them.
Awesome. That's great. Well, yeah, it's a big space. And like you said, I'm sure there's a lot of related problems that can be addressed within finance and the nonprofit world. So I love it. I'm really excited for you all. Thank you so much for coming on, Seth. It's been a lot of fun. So before we sign off, where can listeners go to connect with you and to learn more about Infinite Giving?
Yeah, great question. If you want to get in touch with me, I'm pretty active on LinkedIn. So just look me up, Seth Radman, and I'd be happy to get in touch with you. If you're interested in Infinite Giving, just go to our website, infinitegiving.com. There's a nice big contact button in the top. If you want to schedule a quick call with us just to learn more and see if we could be a good fit, we'd love to chat.
All right, awesome. And I'll definitely keep my ears open for folks that work at nonprofits that I know, ask them a little bit about how they're doing it now.
Yeah.
Awesome. Well, thanks again. It's been great having you on The Digital Footprint, and appreciate it, Seth. Talk to you later.
Thanks for having me, Richard. I'll see you.
Thank you for listening to The Digital Footprint. This show is brought to you by Tyrannosaurus Tech, an award-winning technology partner dedicated to designing and developing high-impact software products. If you like what you heard in this episode, make sure to subscribe to the podcast on Apple, Spotify, or wherever you get your podcasts. For show notes and access to all episodes, please visit tyrannosaurustech.com/blog. Digital Footprint.